Okay, we're back with another market open live stream. Um, just gonna go over our pre-market analysis. So, if you're new here, what we usually do, I want to welcome everyone into the chat. You know, 15 minutes until the market opens, so we want to get through this quite quickly. Um, just gonna let people join. Okay. So, what we usually do. Today is Friday, the 31st of October, last day of the month. Um, Last days usually tend to have some sort of bearish price action. I'm going to show you what we're expecting to see in the markets today. So, just so we're aware, we're still in a we're still technically in a bullish price action. And what that means is that prices still making high highs and higher lows. So we can leave that as is, still making bullish price action. External targets, the highs and external highs have been taken, so we'll put this as yes. And the reason as to why this is a yes is because we've taken our external liquidity, and what that basically means is pretty much this level right here is our external liquidity. And so what that looks like is when price action goes in this manner where we have a high, we pull back into the high, and then we rally and make an even higher high. This move here becomes our external liquidity in an attempt to target this level. So from our pullback area, we rally and take our external liquidity, and that has occurred. And so when that occurs, we can mark this on as here our external liquidity has been taken, yes, and this allows us to also now be able to position for potential reversal condition, and that's only if we have an opportunity to do so. That presents a good opportunity to sell the market down. All right, so if we continue, just get rid of all of that. We know the market is currently trending, and now we're going to map out our session liquidity. And the reason why this is important is because session liquidity allows us to make predictions for what we expect the market to do in session. I'm going to fly through this really quickly. So we have an important gap, and that important gap is our opening gap. So we'll leave that on there. We have an important opening gap or fair value gap. Important levels of internal liquidity. We'll check the 15-minute chart. Are there important levels of internal liquidity? And as you can see, we don't quite have any internal liquidity that's important at this current moment in time, as we've already taken this high right here. And so the only other level of internal liquidity will represent our session lows, and I've already marked this out on the chart for us. This low right here represents our London session low. So this is our London session low. So we've set this high here, and now we've got a target of our London session low. Alright, so just to be clear, we're still in a bullish market, still trending higher. We've have our external highs, and our external highs happen to be this level right here, which we identified was an uptrend. We had a pullback, and the rally from the pullback was an attempt to target our external highs, which it did, and we've swept our external highs. So that has already taken place, and if we have swept our external highs, external liquidity, then we have an opportunity to potentially take a reversal trade, and that would be a trade targeting intraday liquidity if it's good risk to reward. So going forward, we've mapped out our important fair value gap, which is our opening gap, this area right here, and we've also got important levels of internal liquidity already been taken, which was this 15-minute high up here that was swept early in the London session. And so early in the New York session, I should say. And so going forward, what we're looking to do is we're trying to figure out where's the next target for price. And we've marked out our session lows, which is inside our order fair value gap. Our London session lows is right here. And so based on London sessions lows being down there, we know in order for the market to continue moving in a bit bullish direction, we can actually take short trades into our London session low if that occurs in session. Alright, so moving forward, now we're going to look at whether or not the hourly and the 4-hour chart is in confluence. And so if we hop up onto the hourly chart, we can see that we've really been trading in a sideways range for pretty much since yesterday. We've just been going sideways. We haven't really gone anywhere. And the reason why this is important is because this sideways range indicates to me that we could continue a directional move downwards today, because this would operate as what we call a pennant flag, which is just a build up of price action accumulating before distributing in the downward direction. And that's why this sideways movement is extremely important today. So hourly chart's not very clear, but we can tell that we're moving sideways in the trend. If we hop onto the 4-hour chart, the 4-hour chart is actually in somewhat of a downtrend because we made a lower low here, and then we rally back up to this order block, and then we start to come down again. So although it's not clear, what we do know and what we can say is that we've got this level right here that was rejected off, and if this order block does hold, then we could say that this market is bearish, and that's on a 4-hour chart. So if I was to make an assumption, I'd say the 4-hour and hourly chart currently unclear. However, siding for a favorable decline into London session lows. And so going into this session, regardless of what takes place, regardless of whether or not we have a rally into the session or not, one thing we do know is that we first need to see London session lows targeted. And so I'm expecting price to go down here in this session, and then what happens in the session is going to be the defining factor. And if we have a massive close below our London session low at 2 o'clock on the hourly chart, then the close would be the defining factor in regards to order flow, and price will most likely continue to target lower levels and close our gap. And we've had 1 day of red candles, we've had a second day of red candle. This third day could end up being the gap close that gets us back into our external range. And once price closes below this gap and back in the range, we are most likely going to head lower. And I released a video earlier today saying that I believe that we was going to target these levels down here in an attempt to try and sweep liquidity through the month of November, given the seasonal weakness. Although we've expected seasonal weakness from September, October, I believe November could be the month we do see some seasonal weakness, and the charts seem to be playing that same factor. So we'll keep an eye on that. Alright, so we've got about 5 minutes, less than 5 minutes until the market opens. We're still expecting price to target. Yeah, so we've got less than 5 minutes until the market opens, and we're still expecting price to attempt to target our London session low. My belief is that any red candles that close from this area. If price closes a red candle, I'd expect that to be the catalyst for further decline into London, into New York session open. I'm already positioned short. Um, on my account, I got positioned, I believe, yesterday. I'll show you this really quickly. I got positioned yesterday. If you can see that, I got quite a good position. Um, so I'm already short, and for that reason, I don't necessarily need to look for further short positions today. Um, However, obviously today's analysis does correspond potentially with a decline. So the better the position you are, the better the trade. The less you have to risk, and that's why I'm holding my position. And I'm not looking to get into any other short trades today. So um, that's really what I'm looking for today. I'm just looking for price to continue in the direction that I've already positioned in. So yeah, that's pretty much what we're looking at, and it's been quite a volatile couple of days. We've gone up, we've gone down, we've gone up, we've gone down, but my belief is still that we end up closing this gap and that we begin an aggressive decline. So going into the session, hopefully we can see some more of that. That being said, if the market does end up reversing, that's also fine. Um, this trade is slightly against the trend, but it is a part of our playbook. As I've said, if we have a sweep of external liquidity, we do have the potential opportunity to short the market down in the attempt to capture a reversal trade, and it has to target intraday liquidity. So it's everything that we've got on the markets. It's everything that we've predicted. Um, so we've tested this, and we know that it's profitable. Um, we know that majority of the trades should have a higher return. So that's why we're taking these positions. Um, so going into the session, about 30 more seconds until the market opens. I wish you guys all the best in your trading system today, and let's see what happens. All right, so New York session's finally open. We're starting to see some selling pressure come in. Um, we are still trying to target our London session lows, and I am expecting price to pretty much break it. Um, Really, I should exit my position inside the gap, but I'm gonna allow it to play out only because it's during the volatility of the New York Open, and so based on that, we should see extra momentum to the downside if sellers really are about to take over. Um, and so we'll keep an eye on that. Alright, so we're keeping our eye on this chart. We want to always wait for the 15-minute candle to close. This candle gives us the data that we're looking for, and so we've got about 10 minutes left until this candle closes. In that 10 minutes, I'm hoping to see quite a substantial decline to try and push the markets down, and hopefully, we'll see the markets actually turn bearish today. Um, and the decline from this current bearish point should be substantial enough to take us back um, into this daily chart range, and that looks just like this. And so, if we don't get the decline that we're looking for, the market is most likely just going to continue to rally higher. However, this three candle pattern, which we see right here, should already be indication to us that the market is headed lower. So first, we need London session liquidity to be targeted, and that is the priority for the session at the moment. And once we target London session liquidity, then we'll reevaluate. And my belief is the targeting of London session liquidity should be aggressive enough to push price much lower. And so we're keeping an eye on all of this. Okay, so we're approaching the close of this 15-minute candle, and we're starting to get closer and closer to our London session low. The reason this is important is because if we get some somewhat of an impulsive candle to close below our London session low, we could see the market begin to decline quite aggressively. There is nothing to stop us from declining, and as I mentioned to you already, um, I've got targets for extremely low levels. I'm expecting somewhat of a correction to take place, and this is about a 5% drop. So this is what I'm looking at currently, as we approach the final couple of moments. We're looking to see whether or not this is going to close below our London session low. And as you can see, we've begun to accelerate towards it, and I believe we might have just swept it. That being said, we're waiting to see how the candle closes, and so if we do get a close below there, then we should be declining further, today or over the next couple of days anyway. So yeah, that's what we're keeping an eye out for. The market's playing out exactly how I've predicted so far, and from here we should see the market begin somewhat of a decline, and we've got a lot of room to fall. We'll keep our eye on that. I'll keep you guys informed. Alright, so I'm just going to explain to you guys why I haven't exited this position. And the main reason I haven't exited this position is because obviously we're printing red candles on a 15-minute chart, and usually we target our liquidity level, for our trades. We target that as our exit, and we also target our gaps as our exits as well. However, the reason I haven't exited the position, and the reason why I'm favouring a decline, is because red candles usually precede further red candles, and so it wouldn't make sense for me to exit the trade. Maybe take partials of the trade, but definitely not exit completely, um, until we get a green candle. So if this market does rally higher over the next 15 minutes and closes a massive green candle, then I'd be justified in exiting the position. However, there is still a potential that the market just declines from here and shifts the hourly chart into a further, into a downtrend, and that's what I'm looking for. I want to see how this candle closes on the hourly chart. The hourly candle takes priority. If you take a look as well, if the hourly closes bearish, then you would most likely see the 4 hour also continue a decline. And so we're gonna keep our eye out on, gonna keep our eye on the hourly candle and the 15-minute candle. If further sellers come in, then we could see the market actually decline. So that's what we're gonna watch. We're not gonna focus only on the gap. Sometimes you have to adjust your system to to benefit for overall moves. And that's exactly what I'm doing here. If this really is the top, I want to be able to benefit from that. And if it's not, I know when I'm going to exit, and I can reposition into the long trades if I want to as well. So that's all. That's also an option. However, being able to catch a top and position for it effectively is extremely difficult, and that's why I want to be patient in exiting my short trades, as joining the uptrend isn't really difficult. It's getting short or exiting your long positions that's supposed to be difficult. Nevertheless, keep our eye on that. Alright, so we're always gonna want to watch to see whether or not the candle closes as a green candle. And this is obviously not great. We're starting to see quite a lot of bullish momentum come back in. But we still need to watch out and see how the candle actually closes. The candle close is the most important aspect of the data. The fluctuations in between price mean absolutely nothing. How the candle actually closes is what means the most. And so, seeing the market rally like this probably indicates to me that we're probably going to go up today. However, well, how I feel is probably how a lot of traders who are looking to get long feel. And so, um, they're the ones that are buying here, and they're the ones that are about to get swept when the market actually does collapse. That's how I tend to look at it. When I'm waiting for the data, I tend to think the market inducing more buyers into the market, and how it's making me feel is probably how it's making all the other trapped traders feel. And so we always want to wait for the close of the candle and ignore what's going on in between. And as you see, we're fluctuating, we're going up and we're going down. But what's important is what happens in the next 6 minutes and 45 seconds. And so we'll keep our eye on that. Right, so we're approaching the last few minutes of this candle. This is going to be the most important part of this of the day. This is going to decide whether or not we continue going down or whether or not price ends up rallying for the day. And I'm still favoured for lower prices. That being said, I can easily be wrong at this point. However, we want to see price come down into this gap and close below this level. It's about 100 pips away. It's not impossible in the next minute, but it will take a does require a bit of a miracle, what I like to call miracle candles. If we hop back onto the 15 minute, we're seeing the 15 minute sort of give up all the rally that just occurred in the last candle. We'll see how aggressive that gets. I am in quite a bit of profit at the moment. It's a nice position I got into. All the fluctuations that's occurring today affects me in pretty much not all. Doesn't affect my position at all. I'm deep in profit. I'm about 200 points in profit. So that's why positioning is important. It allows you to be emotionless and just watch the actual tape really. So that's what we're doing. About 40 seconds left until the candle closes. If we jump on the hourly chart, we'll see if the hourly does close down. That would be a good indication. However, we would have wanted it to close inside the gap, and so that's what we're watching out for. Nevertheless, we'll keep our eye on this. so we're starting to see the market make its move down, which is exactly what we're looking for. Now we're trying to see this happen quite aggressively. Any rejections off here, it's not a great look, and so we will keep our eye on this. But the idea is obviously we want to see this just absolutely begin to collapse from here. Take out this low and just aggressively fall. And we've been green lighted for this move so far today. We just want to see it follow through. And the first, what should I say? The first confirmation of that would be a close below this low, and a close below this low would indicate that we're now on a downtrend, and downtrend is confirmed even on a 15-minute chart, and then hopefully the hourly chart continues that move as well. But once we get the hourly chart and the 15-minute chart in confluence, we should see the 4 hour also fall in line, and then once the 4 hours in line, then we'd get this close below our opening gap, and then the close below our opening gap will leave us right here with price aggressively re-entering our range, and then we could start targeting our lower levels of liquidity, which was here, here, and here. This liquidity pool is where I'm after. It's where we're targeting. So this is a massive trade for me to take. It's exactly what I'm looking to profit from. It's actually going to be a 30-hour trade if this plays out exactly how I expect it to, and I will be taking partials along the way. And so let's just keep on watching to see how this actually plays out for today alone. Today we're looking for a close below our opening gap, so we'll keep our eye on that. So because we are actually in a bullish trend, multiple rejections off this gap after sweeping, you know, our London session low would would be an indication that we may be able to actually switch sides in the market and look to get long. I'm gonna wait for this close to happen before I do that, which is 2 minutes away. I'm gonna wait for the close. If price cannot close below this area, this London session low, then I will get out. If price closes a green candle and we close above this area, I'm gonna get out. If price closes a green candle slightly above this area, I'm gonna get out. If we close a red candle, I'm staying in. Another reason I might stay in is maybe we close a doji candle or slightly green candle. I'll stay in maybe the first 5 minutes of the following candle because I want to see whether or not the following candle engulfs it to the downside. But because our overall trend, and if we take a look at our pre-market analysis, pre-market overall trend is bullish, um, and this trade is just a potential reversal trade targeting intraday liquidity. We've already swept that, so now I pretty much I'm considering actually looking for long trades. Um, if we're unable to displace to the downside, and that's my reasoning behind that. I'm gonna give it another minute or so and see how we actually play out. But I want to see some aggressive movement down to keep me short in this trade. If not, I'm gonna get out. We'll keep our eye on this over the next couple of minutes. Over the next minute or so, we should be making a decision. So we'll keep our eye on that. Alright, so as I said, we'll give it the next 5 minutes to see if we get a massive engulfing candle down. But this isn't the greatest look. So if we do get an engulfing candle down, we stay short. If the market rallies up, then we get out. It looks like we're starting to go down. We'll see if this engulfing candle picks up steam because that's what we're looking for. Keep an eye on that. Okay, so I would just like to say my ability to stay short in this market is solely based on experience. Solely based on experience. This is something I've seen time and time again, where price makes it seem as if we're actually in an uptrend, and then in the last couple of moments, we see an engulfing candle to the downside, indicating that price is going to go down. And that's what I believe that we're about to see over this 15-minute candle. I believe that we're actually about to continue our decline, and all of this is just accumulation before that final distribution lower. And this plays into the hourly candle as well, which is also needs to close below this level. So it's better that this takes place, this displacement takes place towards the back end of the hour, and that's why it makes sense for this consolidation to continue to occur. As you can see, this is all just a mess of price action. If we hop onto the 1 minute chart, you can see it's all just a mess of price action. But my belief is that this price action is in preparation of a further decline, and that further decline is to target the previous days, the previous range on the hourly chart. And so that's why I'm being extremely patient in this trade. Um, as I said already, I believe that we could have a massive, massive correction, roughly about 10%, over 3,000 points, and that's going to be a 30-yard trade. And so, if that is the case, it would make sense for us to be patient with the trade and not close out as soon as we see a simple little hurdle. However, if we do get multiple green candle closes, so if in the next 8 minutes this candle doesn't close as an engulfing candle to the downside, if we close as a bullish candle to the upside, I will consider exiting the position and potentially even switching to bullish. But that's what we're looking at for now. I'm still waiting to see how this plays out. Nevertheless, we'll keep an eye on that. Alright, so as you can see, the buyers are beginning to take hold, and this is usually where I would join the buyers as well. I'm going to give it another minute or so. I don't want to get in prematurely. I'm going to give it obviously to the close of the candle. We'll see how price is getting close to it. If there's no indication of selling as we approach the close of this candle, then I will look to get long and get out my short and get long. But currently, as it looks currently, it looks like we're going to be going higher. And this is where I would look to get long. Let's just see whether or not we have what I like to call magical miracle candle, and that's when this candle just falls off a cliff as we approach the final minute. We're entering the last minute. Let's see if we get a miracle candle. As it stands, it doesn't seem like we're going to get the strength to become a miracle candle. However, it's slowly increasing, starting to come down. We've got to watch how it closes in the next 30 seconds. Let's see. Okay, so we are coming down a little bit. I'm going to give it another 5 minutes, simply because if you take a look, we close below this level, and this could be a liquidity sweep if price comes down aggressively. So I'm going to give it another 5 minutes. Alright, so if we decline aggressively from here, sells are still on the table. And you see how my experience allowed me to maneuver this trade. It allowed me to, not exit prematurely, but to wait until all the data has been given to me before I exit. And that's why I'm still holding my shorts. Obviously, it would have been better for us to look for longs here, but given my experience, I decided to give it a few more minutes. So now, if we do get some aggressive selling from here, we would have a clean run to target this low here as internal liquidity, and then further target the lows at the bottom of the range. So we're still happy. I'm still happy with this current position. Alright, so we're going to need to see some aggressive selling from here. And if we don't get that, then I'm going to guess our bearish bias will be eliminated. So we're looking for some stronger selling to come in.